Hey folks, good evening, and welcome to today's live session. Right, today we'll be looking at the Fed's preferred inflation gauge, and we'll be looking at the next two Federal Reserve interest rates change and some of the key economic data that was presented in the past few months. All right, today is the 27th of August. My name is Sherman, and I'm an FX strategist. I mainly specialize in technical analysis, so we're doing quite a bit of that today. Before we begin, trading any forms of derivatives carries significant risk. Do ensure you fully understand the risk before you make any trading decisions. All right, always start off with your own demo accounts first before moving on to your live accounts. Right. So as always, we are going to look at the analysis done by Gemini. Pretty straightforward. And when we look at the Federal Reserve key indicators, these are the two main metrics. One is the PCE, which is your personal consumption expenditures, as well as a CPI, which is your consumer price index. Okay, and we're going to differentiate between these two. But the key idea is that the key number is 2%, which is the Federal Reserve long-term inflation target. And this 2% basically means that prices should rise by 2% annually, right? Prices across products should rise by 2% annually. And that is basically a healthy number to watch out for. Okay, so personal consumption expenditure, okay, versus your CPI. Okay, one basically looks at the spending of the households, and then the other CPI is basically looking at your expenditure out-of-pocket costs. Okay, so they do not represent the same thing. Okay, and there are certain formulas in which they are used to calculate the weighted average of all these prices and to see if the economy is in a good health or bad health. Okay, so what we're looking for, 2%, is the CPI, okay, and not the PCE price index. Okay, so for PCE, if you look at core PCE was 2.79%, still quite a distance away from that 2% target. Headline PCE is 2.58%. This is the most recent announcement. Okay, so in short, what's the paradox that we're looking at? You have real consumer spending and income slowing down, and you have core inflation moving upwards. So in this inference is basically your supply side is actually causing this sort of phenomenon, right? Your inflation may be driven by supply side issues. Let me just zoom in a little bit. Okay, so you're paying higher prices. Okay, your core inflation is going up, but your consumers are spending lesser. So if they're spending lesser, but prices are going up, they're spending on. It's usually each particular good or services is actually more expensive as time goes on. Okay, so a few key things that we can actually learn from history. First is that during the 1970s to 1980s, and all of this is to prevent stagflation. Okay, stagflation is when your income doesn't rise as fast as prices. So you get into this situation where the economy is not growing, neither is it in a recession. Okay, so late 1970s, what they did was they increased interest rates hikes to ensure price stability and make sure that they are actually fighting the inflation, reduce the amount of credit being issued in the economy, reduce the amount of flow of money in the economy. Okay, in 1990s, Alan Greenspan, right, came out with this preemptive tightening, which kept inflation low and stable. And then now, post-pandemic, we saw 5% to 8% inflation rates during the pandemic, right? A lot of money printing during the period. okay, and then a quick rise post 2022 for the Federal Reserve to actually increase the rates. Okay, so right now what we are looking out for is, will the Federal Reserve decrease interest rates to stimulate the economy while inflation is still above that 2% mark, right? And that will actually cause quite a bit of a push in the inflation. Okay, so what we're kind of interested in looking out for is the CME Group FedWatch tool, yeah, under the CME website, and you can see based on the 17th September, this is going to be in about 2 weeks' time. Okay, the probability of a Federal Reserve rate cut of a 25 basis point is at 87.2%. Okay, so that has remained stable for at least a week now. And we're going to look at the charts, but last week, I think there was the announcement of your CPI, right? And that actually caused the dollar to actually weaken uh, after the news. Okay, so 87.2 for a 25 basis point cut. And if you look at the 29th October, which is the next FOMC meeting, okay, still undecided, but largely maintaining at this 25 basis point cut. And then for the final meeting on the 10th of December, you get to see the likelihood of a further 25 basis point cut down to 3.75. So if you're looking at the last quarter of the year, dollar is probably going to weaken due to this decrease in the interest rates. Okay, so let's look at the charts now. We want to look at DXY for a start. Okay, so dollar index is the index measuring the strength of the US dollar. So you kind of want to look at that going into towards the end of the year, and the expectation is a weakening of this currency. Okay, so on the higher time frame daily, we're going to use your pivot points again. The one that we're using is called Wayne's pivot, just to mark out the key levels on the monthly. So we're nearing the end of the month. This is probably the furthest that we're going to go to the bottom. Okay, and then this is going to set up the movement for the month of September. So I think a lot of price ranging. One thing is post-summer, traders are coming back. Trading is a bit slow. Okay, but of course, going to 17th September, I think mid of September, okay, we are probably going to see a move either straight to the downside or towards R2 and 4. Okay, based on the technicals of your DXY, you can see the breakout of this downward channel. Okay, this downward channel started probably on the 3rd of February. And for the entirety of this year, you can see that the dollar has been weakening for the most part of the first half of this year. Okay, so potentially once this has been broken out of this channel, what we're looking for is why did the price not make a lower low, which means or give us the indication that there is going to be a strong support around this area here. As it breaks out, it did not mean that sellers are not willing to sell the dollar below this level. Okay, so we're gonna see quite a bit of support here, and hopefully, if this plays out, we want to see, if we were looking for weakness of the dollar, we are hoping to see a further break below this range before selling off. Okay, otherwise, the price action right now supports a dollar strength, and we potentially can see, that means has been priced in for a 25 basis point cut in September. We want to be looking at a buy around this area 97, and then the target will be R2M. Okay. So right now we're in the range. We're not looking to buy this entry here. So usually when we are talking about the pivot points on the monthly, we are looking at an M2 pivot entry. Okay, but for us to actually start entering here, we need to see buyers willing to break above the pivot. Okay, break above this area, retest, and then we look for an entry around this area. Okay, otherwise the long-standing support will still be around this area here. And you'll see that this is actually the inverse of your euro dollar. Okay, so S1 coincides with the middle of this range here. So this is probably going to be the spot that we're looking at around the 97.36 area. Okay, not much to kind of talk about for the rest of this month, but we potentially can see a sweep above this high here before it hits downward. So continuation to the upside and then sweep back down to this area here. Okay, so this was the last Friday's news. Okay, and then dollar sold off during that period. Okay, so overall, we're looking at a continuation, at least to create a double bottom, right? Before we make a decision to look for entry to the upside. So our bias right now is to the downside for the dollar, and this supports both the fundamental view as well as your technical view. Okay, so let's look at some of the other currencies that are widely traded. Okay, let's look at euro dollar first, and then we can look at the other currencies. Okay, so euro dollar since February, strong push, and then this mark here, let's clear all of this. So this area here around in July, okay, came to a nice support, okay, breaking out of this high here. Okay, this was the high that was tapped into this area here. And then we're looking at this as the support, right? It failed to make that high, and as it comes down, okay, sellers are very wary of this entire area here. Okay, so if you go down to the lower time frame, okay, we're finding a lot of resistance at this area. This was last Friday again, push up, and now we are back down to this area. So for us to actually be bullish on the euro dollar, okay, we need to see a big push. Again, the news is gonna happen on Friday for your PCE. Okay, so tonight is going to be relatively dry in terms of the news. But this low was created from this area here. Okay, and this was the London session. Okay, let's put on the London sessions. Okay, so you can add this by Lux Algo. Remove your pivot points. And you can see this sell-off started off from your blue zone, which is the start of your London session. Okay, so potentially we're going to see a quick move back up to this area. And if we're truly bearish, then we'll probably do a sweep, and then we're going to break below this level here. Okay, this is going to pose as another resistance. So for us to be in this buy, okay, so short-term wise, we want to look at price action back up to these two levels, and then have that rejection of these two levels before either making back to that double bottom because we are bearish on the dollar, bullish on euro. So this is potentially a setup where we would like this area to be taken out first, and then the next area at the start of London. If you miss this move and it pushes past this level, okay, then we potentially can see another set of move up towards this area here, okay? But otherwise, we will probably be looking at an entry like this. Okay, again, today, there isn't any news and we have already swept the lows of Asia, actually the lows of London, okay? So basically want to look at any area that was created from this. So from that low time frame analysis, this has already been taken. So you have sellers coming in pretty aggressive towards the lowest point of today. And then you have a push to the upside. And this are basically the liquidations that are happening due to that aggressive selling. As it retaps into this area, this entire area is going to be voided. So if you are a buyer, you'll probably not get into a position here. All right, so what we're looking at anywhere above this area. And the best bet here is this key area here. Okay, so with that in mind, then that entry would be something where you'll be looking at this downward candle with your stops right below that lowest low, and you're going to drag your entry all the way up. Okay, and you get roughly 1:2 risk to reward. Okay, so if you're looking for 1:3 risk to reward, okay, either you continue pushing it down to this maximum value they can get off that buy to get a 1:4.22, or if you think that this is impossible to get in already, then you would probably want to have your stop loss just below this area. And both these entries give you at least 1:3 risk to reward. Okay, target will not change because this was where that failure happened. So we're probably going to go back up to this area. A lot of sellers here. Okay, so if you are taking profit here, you are going to be in at the level that is similar to that last batch of sellers. Right? So let's look at gold. Okay, so we're kind of seeing strong support here, this area, and then this area as well. Okay, but on the higher time frame, we are looking at, okay, so the daily time frame, you can see the consolidation happening sooner. Okay, something like this. This is the consolidation range. Okay, so you'll probably see a further upside. Okay, if we're going down, right, the best entry is around a sell around this level. Okay, so what we'll be concerned with is on the 4 hours, this high was created from this low. So as long as we stay above this area here, okay, we will be looking for buy entries to at least this previous high here. Okay, so even if prices do fall down back into this level, we can probably expect some retracement before it hits down to this area. Okay, so again, we have the key news coming out tomorrow as well as on Friday. So we can expect a big move. Okay, this is the counter trend, but ideally we would like to see the price move up to the upper boundary of that consolidation range. Okay, So if you're bullish, okay, we are going to be looking at this key area here. And if you're buying, okay, out of the entire range that we saw today, okay, and that includes the yellow. Yellow is the Sydney trading session. Red is the Asian session, and then the blue one is the London session. So you see a lot of buying coming in at 33.73. And if you want to buy as a buyer, okay, this is the entirety of, right? There's sufficient liquidity at this area for you to actually buy. Okay, so we're probably going to aim at this level. Okay, can either sweep this level or this level. Okay, but right, this was the high that was broken out, and you can see how that overlaps with this area here. Okay, so essentially, you wouldn't want to be in a long entry anywhere below this. Okay, so that's where we're going to put our stops, and our target will be that previous high. So that gives us a nice 4.22 risk to reward. Okay. If you're aggressive, you can actually set that entry right at the low of your London session, but that will only give you a 1:2.44. But if you're going to enter here, you will probably not want to sit into that trade below this level. Okay. So then you can actually move up your stop loss to half of this area here, giving you sufficient space for 1:7.49 risk to reward. Right? So this is good. This is good because you have retest of this support as 3 times. Okay. So in fact, we do want this price action to tell us that there are actually buyers interested in this move up, right? So then if it gets up here, we can potentially see this movement in roughly an hour's time. Okay. What we're gonna be afraid of, or what we want to be wary of, is this downward trend. And if sellers are looking at this key level, and they say, look, this is a good price to sell, then we'll forego this buy. Okay. And the alternative would be for it to break down, has to be below these 2 levels, and then back up here again before we start to look for a sell. All right, so let's look at some indices before we end off today's session. Let's look at NASDAQ 100. Okay, still aggressively to the upside, just broken out from this. Some selling happened on Monday, okay, but immediately on Tuesday, sweep that low, and then we're moving towards the upside. So target would be the previous high, 23,987. Okay. So let's look at the 1 hour, and you can see how that swept. Okay, this was Tuesday morning. So quick sell-off, and then the entirety of the Asian session buying back up. Same thing. The highest point that led to this low, the highest point that led to this low, once it's broken, is going to act as that support, broken above this high. So we potentially want to see, Okay, this is going to be a very strong support level only if we see a push to the upside. Okay, up, and then retest, and then up again. Okay, otherwise, if we don't see this, then this is going to be our near-term support. We want to see price dip into this area, sweep, and then move to the upside. Okay, where's the target? 23,987. Okay. And again, when we're looking at the indices against the dollar, and we are looking at a fundamentals of the dollar weakening towards the next FOMC, right? This is aligned with that macro view. Okay, so same thing with your US 500. You're probably going to see something like this as well. Okay, and looking for this retest. And the interesting thing would be to look at this low and you push it all the way up to the high. Okay, this is 50% of that move. Okay, and then it continues its move. So some of you might be looking at this and say, look, this is a bullish flag. And it has broken out of this bullish flag. So this is potentially the prime demand zone. Okay. And you guys can see I've placed this red and yellow volume profile at the side. Okay. Let me just change the colors. Change to blue. Okay. So a lot of volume coming up here. And whenever there's increased volume, and before the increased volume, we're coming from a price point, a lower price point. It means that sellers are coming in. Can be buyers getting out, which mean that those buyers from the bottom here are actually taking their profit. Okay, or fresh new sellers coming in to sell this double top. Okay. If the sellers are not strong enough, okay, and sellers start to get out, then you see that cascading push to the upside, okay, which is in line with the analysis. Secondly, what we want to see is we want to see that level where you get the most volume before that push up. So right now, this volume profile is only looking at this time range with all of this volume here. And you can see the area that I've highlighted is slightly above the key level. Okay, so potentially we want to kind of converge this area here with that bearish flag. So if price do in fact come down into this area, we potentially want to see a price action like this. Okay, same thing when is the buy signal coming in. The buy signal will be the highest price point that created the lowest low of this session. Okay, we need those sellers to be out, and once the price breaks above that, that gives us the indication for us to buy. So just looking at any fair value gap around this area here, and then we'll be looking for that buy entry. Okay, how do we know this is the low? You can actually see at which point did this move break. Okay, so this move actually break this high here. We missed this point by a little bit. Okay, so probably not be able to get in here, but once it failed to make a lower low, okay, breaking above this level, this would have been your entry to the upside. And this was around the lunch time last night during the New York trading session. All right, cool. Okay, so some rejection of that red line as we are looking out for that. So This is critical. 830, we want to see if we can get buyers pushing this up out of this zone here. Otherwise, this is going to be the the plan for tonight. And then if it breaks out, this is probably going into New York afternoon session. Okay, so that's all I have for you guys. Are there any other instruments that you guys are interested in? We can do one last one before we end off. All right, cool. Everyone's good. Okay. Yeah. Okay, so I think for right, we'll do one last one, dollar yen. Okay, so interestingly, macro-wise, dollar, we're looking for it to weaken. Okay, so dollar yen has weakened quite a bit at the start of this year, and then it's trying to make its comeback. Okay, so ideally, this high here, before we make a, because this is, if you look closely, let me just close off that canvas watermark. Okay. Okay, so this was the low. You can see how that overlaps. Okay, that quick sell-off on the 1st of August. Okay, and you can see this high is supported by this low. Okay, so for us to be truly bearish, we will need price to get back down to this level. Okay, meaning to say that there's no longer any interest for buyers above this level. Okay, and this will have made 100% retracement. So anything that had happened over the past 1 month, okay, you are basically back to break even. So once this happens, this gives us that indication that there's no more interest for buyers of US dollar, in which that coincides with our macro view. And this entire area is going to be the resistance. Okay, we wouldn't see price breaking above because anyone who wanted to sell, right, came in right at a point in time where the lowest point that happened on the 31st of July, okay, the sellers were very aggressive in taking this level. So any buyers that come into here, they're ready to sell. Okay, so we want to see is a move down to this 100% retracement. And this entire area is going to be a strong resistance. We wouldn't see price revisit this area and then allow the price to fall to the downside. Okay. And potentially we want to see a nice double bottom. Okay, all the way down to here again. Maximum value for all the buyers. Okay, and then you see a push to the upside again above 140. Okay, this is in line with the macro. If we're looking at a bullish move, okay, we would like to see price break above this high, retest, and then it goes up. Okay, the unique thing about dollar yen is that you get positive swaps on dollar. So then this is a much easier trade. Okay, but overall on the macro, you're looking at a weakening of the dollar. So then this is kind of like a more long-term trade. Okay, cool. All right. So that's all I have for you guys today. I think this will be the last session for this month. Okay, so if you have any questions, feel free to email support at Vantage Markets. And then if you want the previous webinars, you can go to this link here, vantagemarkets.com/academy/live. All right. With that, all the best to trading the upcoming session. I'll see you guys again soon.